And truthfully, a lot of people choose to put 20% down because they're really anxious to not pay private mortgage insurance. But if you have a high credit score, your PMI is super cheap. Potentially you're holding on to 10% that you would have put down that you could use to do home improvements. You could put it in savings for an emergency. I can't tell you how many people buy a house and literally want to wipe out their savings.
Welcome to the Real Estate of Texas with the Gals of the Hill Country, brought to you by Solid Realty Group in Boerne, Texas at solidrealtygroup.com. And now your hosts, Jessica Johnson and Cali Red.
Welcome to the Real Estate of Texas. I'm Cali Red with Solid Realty Group, here with Jessica Johnson, my lovely business partner. And a little later on in the show today, we're going to meet Lillian Oler over at Assembly Cocktail Workshop. She's going to tell us all about it. I'm really excited about that cute little shop. It's down here on Main Street in Boerne. But anyways, today we have a special guest here. Usually it's just Jess and I gabbing up here. But today we have Christina O'Connor of Pilgrim Mortgage, the O'Connor Group over there at Pilgrim Mortgage. And she's joining us live up here high above the Main Street of Boerne. And we're going to learn all about mortgages.
Good morning.
Good morning, Christina.
Welcome. Thank you for being here.
Thanks for having me.
We wanted to talk to you guys this morning about loans. And a couple of shows ago, we had a big discussion about what it was that you needed to prepare yourself for to actually get to the closing table to buy a house. And we decided as we discussed that show that we really needed to bring in the expert lender. We're the expert on the real estate side. We're the expert on all of those things. But we really need is kind of a breakdown on what the mortgage world does, what the lenders need, how they get our clients into the house. So we're super happy to have you here today. We've had a couple questions that have come across, but tell us a little bit about yourself and how you get the buyers situated to get into the home without having, some of the stresses that they don't need to have.
I think what we really do differently is getting to know our clients, because a mortgage really is a long-term financial move. And so many people go in thinking that they know what they want because they've done some research, but the truth is there's 1,000 different ways to finance your house. And what we really do is get to know our clients and strategize with them, because it's not just about this purchase, it's about what they plan to do 3 years from now, 5 years from now, 10 years from now. They can alter the structuring of the loan to best suit their financial goals. And a lot of lenders don't have the knowledge or the care to really dig deep. And I think that's where people lose out in tens of thousands of dollars sometimes in interest being paid because of the structure of the loan not being specific to them.
And so when you say that they're paying extra money because the loan's not structured correctly for them, give me an example of what that means.
So I had a client a few years ago that they were planning for retirement. They were in their 60s and they were selling a house and purchasing a new construction house. And they came to me and said, I want to put all of the proceeds down from the sale of our home on the new house. And that was about a 40% down payment. Yet they had $87,000 in credit card debt, right? So they had no long-term plan for retirement, and they were in their 60s. So I could not give them, the 40% down was because they wanted a conventional loan, putting at least 20% down. They wouldn't have to pay private mortgage insurance. And their thought process was, we take the proceeds and we put them towards the purchase. And I couldn't qualify them for a conventional loan. Because their debt ratio was too high.
Debt ratio, okay.
Because of all the credit card debt, right? So instead, I would have to give them an FHA loan that would have an upfront mortgage. It's not a bad loan, but it's not right for them. Upfront mortgage insurance premium. They pay a monthly mortgage insurance for at least 10 years. It just wasn't what was best for them. So instead, I suggested doing a 5% down conventional loan, wiping out $65,000 of credit card debt, reducing their monthly obligations by $2,500, basically getting them fully out of credit card debt within a year of purchasing the home, and saving them $3,500 a month in minimum credit card payments that could then be applied to the mortgage to get them under the 20% and eliminate the PMI.
Right, gotcha.
And the husband, they talked about it that night, and the husband called the next day and he cried. He said, I never knew how I was going to retire until I talked to you, and my wife just didn't understand why I don't sleep at night. It's because I can't see the future, and now I can. And so this is absolutely. So just caring enough to go, I play devil's advocate every day. What is best for you? You've got this situation, but based on over 20 years of mortgage experience, I at least want to give you my expert professional advice so that you can make an educated decision.
Right. So when you first talk to someone, do Do you have about 3 to 5 basic questions of what you ask and what you need them to have prepared?
So basically, to apply for a mortgage, I need your name, date of birth, social security number, where you've lived for the last 2 years and where you've worked for the last 2 years, and who you bank with, and approximately how much money you have. That's it. So it doesn't have to be more complicated than what you think.
Mm-hmm.
And then from there, we discuss the goals. Maximum monthly payment, maximum cash to close. And then I provide financing option based on their specific situation and their specific goals.
So do a lot of people come into the loans where they tell you, hey, I want to pay X amount of dollars, and you have to build backwards from that? How do you talk to them about things that will increase that payment over that 30 or 20-year loan that they take, with the interest, or not the interest rates, I'm so sorry.
The taxes and
the
the
taxes
insurance.
going up and the insurance going up, and those things changing, because people are so set in understanding that my payment is going to be this much for the entire 30 years, and then all of a sudden they get in a position where the appraisal district says, oh, your house is much more expensive now. How does that happen? How do you protect your clients and have them understand that that's going to come down the road?
Well, I think this year has been a prime example of that. As soon as we got 2022 values released on Kendall County or Bexar County Appraisal District, I started giving them payments based on 2022 values, even though I could qualify them on 2021 because the tax bills aren't out. They need to be financially prepared for that, especially on new construction. You've heard the history of people going in and their payment tripling. Right? It's because that lender didn't care enough to go, hey, the payment initially is going to be this, but you need to be setting aside X number of dollars every single month. So next year, and depending on when they close, it could be a year and a half to 2 years later before the taxes catch up.
And then they get slammed.
They're killed.
Right.
So they can.
But that's just, the lenders really need to care more about that and less about how many
I tell them
loans they
set
close
aside
in a month.
Set up a separate savings account that you
Absolutely.
can't touch, because that money will buy you options down the line.
Absolutely.
Absolutely. And what else? Like, what other things do people need to really be prepared for?
Well, so many times people will go, what's the maximum I can qualify for? And I tell them that's not the question to answer or to ask.
That's not the question to ask.
We use gross income, not your net, which you live on, and we only look at the debts that report on your credit report. So the quality of my life is in the gray that I don't take into account as a lender. Right? If you've got kids in sports, that costs money. If you want to take a vacation every year, that costs money. Your wife ain't so pretty when you can't put gas in the car to take her anywhere. And Top Ramen gets old. You know what I mean? So
quality of life is a thing. You don't want to be house poor.
Exactly. So I tell people I can make you feel warm and fuzzy and tell you qualify for $550,000, but when you tell me your maximum monthly payment based on your lifestyle is $1,900 and you've got $20,000 to spend, it's not going to be a $500,000 house. So let's be realistic. And sometimes the house can dictate the way we end up doing the financing. So they'll come in going, I'm going to live in the house forever. So, but then the house that they end up buying, they're like, yeah, this is going to be a 3-year house for us. It's not going to be a 20-year house. So sometimes what we thought we were going to do at the beginning can change based on the house that they choose. And having that flexibility is a blessing.
And the house that's available. Maybe it's not what they wanted to choose.
Yeah.
What they could find.
Hopefully that's easing up a little bit, right?
Yes,
it is.
Exactly.
We're starting to see that come back. The time on the market's happening a little longer. So if people have questions and they want to get a loan, they want to get started, how do they find you? How do they reach out to you?
My cell phone is the best way.
Okay.
You can text me. You can call me at 210-414-7534. And my website is o'connormortgage.com.
And Christina, tell us what the best loan type for a new buyer is.
Well, first-time homebuyers have some additional options available to them that you wouldn't have if you've owned property in the last 3 years, for example. So as a first-time homebuyer, you can actually do a 3% down conventional loan. A lot of people don't know that they think that you have to put 5% down, and you're considered a first-time home buyer.
I thought you had to put 20% down. Well, I didn't think that. A lot of people think you have to put 20% down.
They do, and truthfully, a lot of people choose to put 20% down because they're really anxious to not pay private mortgage insurance, right? Insurance against your default by you not putting 20% down. But if you have a high credit score, your PMI is super cheap. I mean, $27 a month. And potentially you're holding on to 10% that you would have put down that you could use to do home improvements. You could put it in savings for an emergency. I can't tell you how many people buy a house and literally want to wipe out their savings. Like, I don't need any money once I'm in the house. And I go, oh my gosh, that's when everything starts.
Right. So
home
you talk
warranty.
to every single person about this type of thing?
Absolutely.
Or?
So many times people will call and go, I'm going to put 20% down. I'm going to put 20% down. And that's where, like I was just saying, in the other scenario, what about your credit card debt? You know, sometimes selling a home is the only way to get out of credit card debt, right? And using that money to your advantage, and developing a savings plan, you know.
But you're saying it's not always the best thing either to just sell your home and then get out of credit card debt. Sometimes
no, it depends. Well, sometimes it depends on each situation.
Yeah.
So, you know, sometimes we pay off some of the credit card debt and we put some of it in savings because people have never established a rainy day fund.
Oh,
you know what I mean?
Yeah.
And money buys options.
It's so interesting to think that no one says people haven't established a rainy day fund. But yes, you're right. That probably occurs more than you think.
You would be surprised.
I would
you
probably
really
be
would be
surprised.
surprised.
So tell us about this 3% down if you
3%
haven't owned a
down
house.
conventional loan. Your interest rate is a little bit higher. Your private mortgage insurance is a little bit higher. Unless you're lower income, there are some special programs for first-time home buyers where you could put 3% down, have a lower interest rate than a 5 or 10% down conventional loan, and the private mortgage insurance associated with a 10% down loan instead of a 3% down. But that's income based and geographically based.
Okay.
So literally, once we start working with you, we're seeing, do you qualify for all the special things
So
first?
is that sort of like a USDA loan?
Similar but different.
Okay.
Right?
Gotcha.
So USDA, similar income situations and geographical locations and all that kind of stuff. But that's a great option for first-time homebuyers. FHA financing. So if their debt ratio is a little bit too high, FHA will let you go to a 57% debt ratio using your gross income. Right? Conventional maxes you out at 50.
Gotcha. Huh.
So if they're, sometimes we're using one spouse and not the other one because the other spouse's credit score is too low and we can qualify with just one spouse's income. So they know that they can afford that 57% debt ratio payment.
Right,
you know what
right.
I mean? So in those cases, and sometimes FHA is a viable option for you. FHA is a government loan for people who didn't serve in the military. So it requires a 3.5% down payment. But it does have monthly mortgage insurance for the life of the loan unless you put 10% down. So you're going to pay monthly mortgage insurance forever and ever until you pay it off or refinance it.
Okay.
So sometimes we start with FHA, and then a few years later, assuming rates are good, then we convert them into a conventional loan.
Right. So the thing is, don't sit around for 30 years thinking you don't have options.
You're
should
marrying the
reevaluate.
house, not the rate. Right? So
There
right
you
now,
go.
as rates are going up or they're higher, statistically, guys, we're still lower than, we're not going to see rates in the twos. The government pushing and buying mortgage-backed securities at the rate that they have over the last few years, that's what the Fed is saying when they're saying we're raising rates, is we're not putting all this money into this anymore, right? Because the economy, they believe, is stabilized enough to still maintain. But rates are up and they're all over the place from one day to the next. The jobs report that came out last week was traumatizing for a few hours, and then we settled in, Tuesday. So timing all of it right is critically important.
Okay. Good to know.
So when people are looking at like a conventional rate, you said that there's an option to do a 3% down.
If you haven't owned in the last 3 years.
If you haven't owned in the last 3 years. And so when they hit 10% down, does that private mortgage insurance drop off for them? Or
20%.
20%. Okay.
Yes. And so how it's structured, it'll automatically fall off at 78%. Okay, once you have 22%, but it's based on the original purchase price and loan amount. So no appreciation is taken into account. So you'll reach your 20% equity a lot sooner.
Quicker.
I tell people, once you think you've got your 20% equity, then you need to call your realtor and ask them to run comparable sales and tell you conservatively, if you were to sell your house right now, what your realtor thinks that you would get for it, conservatively, right? Not top dollar. And if you have your 20, maybe a little bit more than 20% equity, you're going to contact the mortgage company, tell them that you want your PMI removed, and most likely they're going to make you pay for a new appraisal. Right? The appraiser is going to use the same information that you guys provided to them on the comps, right? So if you think conservatively they got the 20% equity, it may be worth the cost of the appraisal for them to get the PMI removed early.
Right.
But don't wait for it just to fall off on its own.
And
You're
then
going to
what do
pay
you
it a
guys
lot longer.
charge for appraisals?
Well, that is the end investor at that time.
Oh, okay.
So I really can't tell you
It's not a set rate.
what Wells or Chase or, PennyMac is going to charge at that point. Right now, traditional appraisals are running between $575 and $850, let's say, depending on location and turn time.
Gotcha.
Right? So if you need something turned around more quickly, then you're going to pay more for it.
Exactly.
So
A rush fee.
The rush fee.
But giving people the option is important, right? So when I disclose, because the appraisal is something, the amount cannot increase once disclosed formally, right? So when I disclose to clients, I will always inflate the estimated appraisal value, because if you guys get held up during the option period and don't let me order the appraisal because you're still negotiating repairs, for example, or closing costs in lieu of repairs, we may have to get a rush on that appraisal, right? So we don't want to take that option away from the buyer. That's where we've seen some credit unions literally just deny loans because they didn't estimate the appraisal fee high enough, and they won't take the hit by paying the $400 differential
I see what you're saying.
between what was disclosed and what is accurate. And that's when I get the call, will you please help me do my loan in 2 weeks, because this guy told me there's no appraiser on the planet that'll go to my house. And I'm like, no, they just didn't disclose a high enough appraisal fee because you live in the boonies. You're right. There's no appraiser that will drive out there for $275. You're right.
But it also just doesn't meet the market standards anymore, so we have to be careful about that.
Yes.
No, but talking about general loans, one of the things that you had mentioned is you kind of required their W-2s and their driver's license and all of that stuff. What do you think is the biggest hardship for people to kind of climb over that mountain? Like, what's the worst thing that people tend to kind of get stuck in, and they have this set belief that this is what they have to do to get their loan, and it causes people to not even apply because they're so afraid that they can't get qualified?
I totally, it's literally taking the first step. So many people are just scared. They don't, how many clients over the years have literally come to me and go, I won't qualify now. I just know it. And I'm going, you're qualified for $275,000. Let's go shopping. What you've got to surround yourself by experts in the field for which you need assistance. So reaching out and having the right people in your circle that actually care about you, I think is what's most important to getting us there. So I encourage you, if you ever want to buy a house, I would love to hear from you. If you don't want to talk to somebody so that you can.
You can reach Christina on her cell phone at
210-414-7534.
Yes, and Christina, one last question before we go. What do you suggest people do after they close on the loan? Like, is there any advice that you have for people to
file for your homestead exemption?
Amen. Yes. Homestead exemption. You don't even have to wait until January anymore. It's so exciting.
Excellent.
There's a form typically that the county will send you asking for information about your purchase. This is sent to the seller as well. So it's going to ask your sales price, what type of loan you did. It looks like a very formal form, but if you read in very fine print,
Throw it away.
It says very clearly because
Texas is a non-disclosure
we're
state.
a non-disclosure state. So if you're telling them what you paid for the house, you're giving them all the opportunity in the world to increase your value and increase your property taxes. Sellers we see doing it more. You know what I mean? Giving them the information is just allowing them to use it against you. So I encourage that. Junk mail. You're going to get a lot of junk mail, right? People are going to offer to file the homestead exemption for you for a fee when it's free.
Yep.
People are going to offer to give you a copy of your deed for a fee, and you're going to get a copy of your deed. Don't be a victim. So even documents saying life insurance quotes that say Pilgrim Mortgage on them, it's public record that you bought it, and it's public record that we financed it. So you're going to get stuff in the mail that says Pilgrim that did not come from me. So I always tell you, hold on to my number, text me your junk mail, and I'll tell you whether it's legit or if you need to shred it.
Yeah. No, for sure.
So
what is your recommendation for overpaying on your monthly payment?
There is no prepayment penalty on any loan that you're going to get in this. Well, I shouldn't say that. On any traditional financing. If you're doing some alternative financing or hard money lending, then absolutely you need to be very careful about that. But applying additional payments to the principal is just going to reduce the amount of interest that you pay over the life of the loan. But understand you can never prepay when I say prepay a mortgage, you can't pay it in advance. So let's say you put $50,000 into the principal of the loan and you want to dictate that that's where the money's going if you're doing that large principal reduction. You're still going to have a payment due the next month. It's not like a car where you can pay it ahead for 5 months and just go out of the country and not worry about it. You're still going to have the mortgage payment, but you're going to cut that term on the mortgage.
Right. But your monthly payment will stay the same.
Absolutely.
Okay, so that won't differentiate unless you refinance or...
So on conventional, you can recast your mortgage typically once. So for a client or a buyer that has a house to sell, for example, and they go, okay, we want to put 5% down right now, but when we sell our house, we're going to make $150,000 and we want to put $100,000 of that into this new mortgage, you can actually put the $100,000 principal reduction and have the remaining balance recast to the lower loan amount and have your payment drop. One time.
That's good information.
So that was introduced a few years ago, and it stopped people from having to go through the full refinance process, take a higher interest rate potentially based on what rates we're doing and all that good stuff. FHA and VA government loans don't allow for that, but conventional does.
Well, that's interesting. What a fascinating amount of information.
There's so much.
So much.
Yes.
Well, if you guys want to know more, just reach out to Christina O'Connor at O'Connor Group at the Pilgrim Mortgage, and she can get you guys all answered. We really appreciate it, Christina.
I appreciate you having me.
We are so very thankful that Christina O'Connor of Pilgrim Mortgage was able to join us this morning to give us a little bit more about lender options and what's going on in the mortgage world. We are super excited to have Lillian Oler with Assemble Cocktail Workshop join us as soon as we come back to let us know a little bit about some fun things to do in Boerne for your evening out. What did she say? Shake it, rock it, and roll it, tin cup it. So
Shake your tin can.
Shake your tin can. That is what she said.
Super cute.
Yes, darling. So in just a minute, we'll be right back. This is Jessica Johnson and Cali Red with the Real Estate of Texas here in Boerne, and we're super excited to continue to share with you guys what we have here in our community.
The real estate of Texas is always changing. Get a solid start to buying or selling a house with Solid Realty Group. Hey y'all, I'm Jessica Johnson, co-owner of Solid Realty Group, Boerne's 5-star realtors, where we have saved our clients over $3 million. Given today's rising home values and interest rates, every penny counts. Call Solid Realty Group to buy or sell, and we can help you save more and stress less. Call us at 210-827-3733, solidrealtygroup.com.
Welcome back to the Real Estate of Texas. I'm Cali Red, broker and owner here at Solid Realty Group. I'm here with Jessica Johnson, and today we are welcoming Lillian Oler from the Assemble Cocktail Workshop. Thank you so much for joining us. We can't wait to hear all about this exciting business.
Absolutely. Thank you so much for having me.
This is great to have you. So I know that you guys have been here, a year now?
Not even. We actually opened our doors in January of this year. So yeah, pretty
8
exciting.
months?
Yeah.
Wow.
8 months.
Fantastic.
8 months in Boerne. It's
So
been
what
great.
do you do?
I teach people how to handcraft fabulous cocktails. So everybody gets their own bar mat, bar tools, premium ingredients, their own little station. They get to wear an apron and shake their tin can until they whip up something great. And then, of course, they get to drink up the fruits of their labor.
And I've heard your Instagram page is noteworthy with beautiful photos.
Oh, well, thank you so much.
Yes. How do people check that out?
Well, it's at Assemble Cocktail on Instagram as well as Facebook.
Fantastic. And so do you guys do like group parties or couples, or how do you guys take care of people here in Boerne?
It's actually all of the above, a little bit of everything. So we have ongoing cocktail workshops Wednesday through Sunday, book a date night or a girls' night out. There's no minimum amount of people. We also host private parties as well. So a little bit more planning goes into that. We can host up to like 18 people inside, up to 40 people outside when the weather's great.
Now, do you go to people's houses and do it, or you just do it at your workshop?
Yeah, we can definitely take the show on the road for a private party anytime.
Okay, so where are you guys located in Boerne?
We are located right in the middle of it all. It's actually 322 South Main Street.
So what is your favorite cocktail to assemble?
Ooh, I've been on a spicy margarita kick.
Ooh, Cali
Yeah.
stave.
So what does that have in it?
So we use a jalapeno tequila, agave syrup, fresh lime, of course, which everybody gets to use the juicers and really flex their muscles. It's super legit. And then a float of ginger beer over the top just for some beautiful effervescence. And we put a smoked sea salt over the top. And then last night we actually tried it with some pink peppercorns, and it was really great. A little salt and pepper garnish on a spicy margarita. It was beautiful on a hot day.
Well, we are so happy to have you here today, Lillian. And one of the big questions we like to ask everybody before they leave is, what is your favorite thing about Boerne?
Oh, my favorite thing about Boerne is the open arms that always welcome new people to the community. There's just this really nice welcoming committee, I feel like, in every industry, every corner, and that's just really what everybody around here takes pride on.
Good. Well, we're glad to welcome you to Boerne, and
thank you.
Go check out Assemble Cocktail Workshop and get your drink on.
Yes,
you guys enjoy.
absolutely. Shake your tin can. Thanks,
You got
everyone.
it.
That's all the time we have today for the Real Estate of Texas, presented by Solid Realty Group. Remember us if you're in the market for a new house or thinking about selling the one you've got. Call us today at 210-827-3733 or go to solidrealtygroup.com. Have a beautiful day.
Bye, y'all.